Hello everyone, my name is Angelo Pantenople and my topic is Evolution of Philippine Taxation. All citizens in today's society must deal with the realities of paying taxes since doing so is essential for government to be able to operate effectively. In return for the money that people pay in taxes, the government pledged to enhance residents' lives through sound leadership. In the context of the Philippines, we must recognize that taxation's development and evolve over time as a means of raising cash for the government and that it was a legacy of our colonial history. It all started from the ancient Filipinos, where they paid their taxes to their datu or the chiefs for the protection they give to them. The tax was termed buwis. Everyone is required to pay their taxes except for the datu chieftains' households. Punishment for not paying taxes was also implemented on this period. The arrival or invasion of the Spanish people from 1521 to 1898 give the Filipinos modern concepts of taxation, wherein 16 years old to 60 years old were forced to pay tributes or tribute to the King of Spain through the colonial government worth 8 reals or 1 peso per year. But they are also other forms of payment like gold, chickens, textile, rice, and forced labor or polo wire servisyo. In 1884, the tribute was published and was replaced by the cedula or cedula, a certificate identifying the taxpayer that needs to be carried all the time. If someone is not able to present their cedula to a Guardia Civil, they will be imprisoned for being indocumentado, which means that they lack valid document or legal personal identification necessary to prove their identity. It was followed by the 1987 Philippine Constitution, stating that it sets limitation on the exercise of the power to tax. The rule of taxation shall be uniform and equitable. The Congress shall evolve progressive system of taxation, wherein the Philippines covers both national and local. National taxes refer to national internal revenue taxes imposed and collected by the national government through the BIR or Bureau of Internal Revenue, while the local taxes is those imposed and collected by the local government. Lately, the current president of the Philippines, President Rodrigo Roa Duterte, implemented the Train Law or the tax reform for acceleration and inclusion, which was signed last January 1, 2018, which seeks to correct a number of deficiencies in the tax system to make it simpler, fairer, and more efficient, wherein the rich will have a bigger contribution and the poor will benefit more from the government's program and services.
Good day everyone, my name is Gina Joyce Blanca. My topic is taxation in Spanish Philippines. The Philippines may have abundant natural resources even before the encroachment of the Spaniards, but our ancestors were mainly involved in a subsistence economy. So the payment of tribute or taxes, buwis, o handog, or the obligation to provide labor services to the datos in some early Filipinos communities in the Philippines may resemble taxation. It is essentially different from contemporary meaning of the concept. The Spaniards altered these subsistence systems because they imposed the payment of tributos or tributes from the Filipinos, similar to what had been practiced in all colonies in America. The purpose is to generate resources to finance the maintenance of the islands, such as salaries of government officials and expenses of the clergy. The Spaniards in revenue collection through the tribute was dispersed nature of the state settlements, which they solved by the introducing of the system of reduction by creating pueblos where the Filipinos were gathered and awarded flats of land to till. Later on, the settlements will be handled by encomenderos who received rewards from the Spanish crown for their services. Exempted from payment of tributos were the principales, alcaldes, gobernadores, cabezas de barangay, soldiers, members of the civil guard, government official, and vagrants. Toward the end of the 16th century, the Manila Acapulco trade was established, the galleons, a way by which the Spaniards could make sure that European presence would be sustained. Once a year, the galleons be loaded up with merchandise from Asia and sent to New Spain or Mexico. And back, this is improved the economy of the Philippines and reinforced the control of the Spaniards all over the country. Tax collection was still very poor, and subsidy from the Spain would be needed through the situado real delivered from the Mexican treasury to the Philippines through the galleons. This subsidy stopped as Mexico became independent in 1820s. In 1884, the payment of tribute was put to a stop and replaced by a poll tax collected through a certificate of identification called the cedula persona. This is required from every resident and must be carried while traveling. Unlike the tribute, the payment of cedulas is by person, not by family. Payment of the cedula is progressive and according to income categories. This system, however, was a heavy burden for the peasants and was easy for the wealthy. But because without the need male Filipinos were obliged to serve, a burden that resulted in debt
And now, let's proceed to taxation under the Americans. The Americans who acquired the Philippines aim to make the economy self-sufficient by running the government with the smallest possible sum of revenue and create surplus in the budget. From 1898 to 1903, the Americans followed the Spanish system of taxation with some modifications, noting that the system introduced by the Spaniards were outdated and regressive. The military government suspended the contracts for the sale of opium, lottery, and mint charges for coinage of money. Later on, the urbana would be replaced by tax on real estate, which became known as the land tax. The land tax was levied on both urban and rural real estates. The problem with land tax was the land titling in the rural area was very disorderly. The appraising of land value was influenced by political and familial factors. The introduction of a taxation system on agricultural land faced objections from the landed elite. Tax evasion was prevalent, especially among the elites. The Internal Revenue Law of 1904 was passed as a reaction to the problems of collecting land tax. It prescribed 10 major sources of revenue. Number 1, license taxes on firms dealing in alcoholic beverages and tobacco. Number 2, excise taxes on alcoholic beverages and tobacco products. Number 3, taxes on banks and bankers. Number 4, document stamp taxes. Number 5, the cedula. Number 6, taxes on insurance and insurance companies. Number 7, taxes on forest product. Number 8, mining concessions. Number 9, taxes on business and manufacturing. And last, number 10, occupational licenses. The cedula went through changes in the new law as the rate was fixed per adult male, which resulted in a great decline in revenues. In 1907, some provinces were authorized to double the fee for the cedula to support the construction and maintenance of roads. The industrial tax was levied on the business community and became a highly complex system that assigned a certain tax to an industrial or commercial activity according to their profitability. The new act also imposed a percentage tax on sales payable quarterly. In 1913, the Underwood-Simmons Tariff Act was passed, resulting in a reduction in the revenue of the government as export taxes levied on sugar, tobacco, hemp, and copra were lifted. To make up for the loss, then Governor General Francis Burton Harrison urged the tax receipt be increased to make up for the loss. Minor changes were made to the 1904 Internal Revenue Act, such as the imposition of taxes on mines, petroleum products, and dealers of petroleum products and tobacco. New sources of taxes were introduced later on in 1914. An income tax was introduced in 1919. An inheritance tax was created in 1932. A national lottery was established to create more revenue for the government. However, these new creations were not enough to increase government revenues.